Hi, this is Lee Phillips. I'm an attorney, actually counselor to the Supreme Court of the United States. I want to talk to you for 2 seconds about the decision you're going to make when you set up a little company, and this could be a medical practice, an online store, real estate investment, I don't care what it is. How are you going to have your entity or your company taxed? And you probably ought to have a company if there's any risk of a liability, because the company, either the LLC or the corporation, will give you the liability shield that protects you from what happens in the company. How are you going to tax it? My major issue in that is how you're going to make your money. If you're going to make your money as passive income, you're going to get rents or you're going to sell real estate or whatever it is, royalties, then I'm going to tax it one way. If I have earned income, I'm doing services or selling products or stuff, then I'm probably going to have it taxed in another format. Now, I don't care if you're a corporation or an LLC, you can be taxed under Subchapter S of the IRS code as if you were an S corporation. So if you're an LLC and you're making money based upon products or services, or you're a corporation making money based on products or services, I'm probably going to recommend that you have an S corporation structure for taxation. The reason is you can take a reasonable salary, and I don't know what a reasonable salary is, it depends upon what you do. Look in the area that you're in, it varies by area in the country, and find out what a reasonable salary for your task is in that area. Take that reasonable salary, anything that you have left above that is profit. Take that out as a distribution. In an S corporation structure, we don't call it a dividend, we call it a distribution. Take it out as a distribution. On that, yeah, you're going to have to pay income tax, but you don't have to pay the Social Security, FICA, FUTA, unemployment, all of that sort of garbage. We call them social taxes. It's going to save you about 13% on what you take out as the profit or the amount above your reasonable salary. Now, the IRS watches this reasonable salary thing, so if you're a heart surgeon, I wouldn't be taking $30,000 a year, okay? But take your reasonable salary, then take the distribution. If you have passive income, the rents, the real estate sales, the royalties, or whatever it is, then I would structure it probably as a partnership. And you can have an LLC, you get all the asset protection of the LLC, but you can have it taxed as if it were a partnership. And we're not worried about the social taxes on those passive types of income. So probably passive income, partnership taxation, probably an LLC taxed as a partnership. Earned income, probably an LLC taxed as an S corporation or an actual S corporation structure. And so that's kind of the way I make my decisions on taxations when I'm thinking about a small business.